All right. So Teresa, good to see you in Los Angeles. You noted pre-show, so nice and cool there, I would imagine right now.
Good to see you.
And I guess you're retired kind of? I'm sure you're on a bunch of big boards and I'm sure you're not twiddling your thumbs all day, but so how has, I guess semi-retirement been treating you?
So it's been nice to kind of have control over my time a bit more. I had been on boards between my time with Radian and going to the Federal Home Loan Bank, and I was able to keep two of those boards while I was with the bank. So I'm continuing that. I chair the audit committee of First Industrial, which is a real estate industrial trust that's publicly traded. And then I'm on the mutual funds boards for T. Rowe Price. And we're a unitary board. So we're actually the board for every US regulated mutual fund that they manage. So that all keeps me busy along with other nonprofit work. I joined the advisory board of the National Housing Conference. So, because I still very much want to pay attention to issues around affordable housing, which I know we're going to spend some time talking about today.
Yeah, it doesn't sound like retirement at all.
Well, I'm a pretty high, A plus personality. So, just kicking back is not
Yeah.
really in my DNA.
Is there potentially one more like full chapter in the Teresa Bazemore book, potentially, or no?
I keep being asked that question, and my preference is no to that. Um, and so I mean, I can never say no, no, it will never happen, but that's not what I'm focused on right now. I'm focused on doing the boards and having a little more flexibility in life.
There you go. Cool. Well, thank you so much for joining us today. Really looking forward to getting your perspective on, yeah, just the housing policies of both parties coming up in the election here, the affordable housing crisis we continue to battle in America, a little bit on the Federal Home Loan Bank system where you spent some time. So really, really looking forward to getting your perspective on all these critical issues today here on the big picture. So.
Sounds good.
All right, well, let's go ahead and get into it. I'm Rich Swerbinsky with Onward and Upward Consulting. This is the big picture. Thank you so much for joining us. We do a live version of this show. I always forget to mention it at the beginning when the most people theoretically are listening. But if you're listening on the podcast or watching us on YouTube, we do this show live every Thursday at 3 Eastern. And you can go to the Chrisman Commentary, chrismancommentary.com to sign up for that. This is part of the Chrisman Commentary Network. Yeah, we always have a nice, engaged live audience, typically a lot of good questions and feedback. So join us on the live. But with that, I'd like to introduce my esteemed colleague and co-host, Rob Chrisman. Rob, we got a chance to hang out this week out in Vegas at the Bellagio at the Acuma conference. Broke a little bread. Good times. Any takeaways from the Acuma event this week?
Well, Rich, I appreciate you giving me some time earlier this week, given that you always had a horde of people surrounding you. Like I saw you go into a restaurant the other night, surrounded by, three or four hefty looking gentlemen. I thought maybe they were your bodyguards or something.
They make me look skinnier. I bring them when I go out to eat. Yeah.
There you go. I thought the Acuma conference was good. There was a lot of good material. You and I and Jeff from MGIC talked about pricing for credit unions. And, it's always interesting when you get involved in a conference where there are a lot of people from a certain part of our industry. So you hear about what they're dealing with and overhear their conversations, or you're involved in those conversations. And right now, I'd say credit unions are in a pretty good spot given where equity is in the nation, given their membership ranks, given their community roots, and given the fact that they service a lot of the loans that they make and retain that servicing. And so gives them a bit of an inside track between having some products that they have that IMBs or brokers will never offer, and having that servicing. So credit union right now, the environment is pretty good for credit unions. So yeah, but overall it was a good event, well attended, almost 600 folks, a fair number of vendors. So it was nice to hear about their products, but it's good. It was good. It was a good event. Did you think the same thing?
Great. Yeah, with everything you said there, I feel like credit unions are really well positioned, really thirsting for knowledge from one another. Very, very pay it forward culture to the organization and the event, which I love. And I thought it was phenomenal. I thought the subject matter was really relevant. People were really positive, filled with just, enthusiasm and excitement for, what lies ahead for our industry. And yeah, it was, like you said, very, very well attended. So stuff.
I'd say that the mood was optimistic, but not jubilant.
Yeah.
Realistically optimistic. Rates have come down, and a lot of companies have trimmed staff. Another advantage that credit unions may have over IMBs or broker shops is the fact that the compensation scale is different. The way of compensating employees is different for credit unions than a lot of other organizations. So it tends to make them leaner, which, is an advantage. So,
Absolutely. Yeah. And this week, very, very excited to announce very special guest that looking forward to having her join on the discussion with us. Very decorated career in our industry. Most recently as the president and CEO of the Federal Home Loan Bank of San Francisco. Before that, did a long stint as the president of Radian. Before that, served as general counsel for a few different very large mortgage originators, and has served and continues to serve on some really influential boards of directors. It is Teresa Bazemore. Teresa, thank you so much for joining us today.
Great to be with you guys today.
Love it. So much.
I'm
Go
going to jump in here. I'm going to intercede, Rich,
Go
Teresa,
ahead.
which is something I can do. And he's always so polite when I interrupt him. But every week, I tell people every week I receive one or two announcements of people retiring. Hey Rob, it's been a great career at ABC. Can you change my email from Joe Blow at abcmortgage.com to Joe Blow at AOL.com or whatever it is? Forget A. Do you think it's possible for somebody who's been in the mortgage business for a while and knows the people, knows the industry so well, to actually retire? Or do you think the majority of them retire like Dave Stevens before he passed away? I'm retiring, and then, I'm consulting now. I'm back and I'm publishing. So is it possible for people to actually retire from our industry?
Well, I think it's difficult to totally separate yourself from the industry, particularly I think for those of us who really are passionate about home ownership and housing for folks. And so you want to still have your fingers in some of those things. And so, I always say it's retirement from working full time at one place as opposed to, sort of kicking back on the beach. And I think, there's a distinction there for sure.
Yeah. I I know somebody who retired from Wells Fargo, then 6 months later they were teaching math at Indiana State. Other people do actually retire, but you're right. I mean, if somebody's very knowledgeable about the business and does feel passionate about the industry, it makes sense for them to not just entirely divorce themselves from it, but more of a gradual, because there is a lot of contribution that they can make. So anyway, sorry, Rich, go ahead.
Oh, yeah, that's good.
No, and absolutely. I mean, a just short, funny story is that, I started at my career doing commercial real estate deals. And some of it was multifamily deals, and some of those were done through bond financing where there was 20% set aside for affordable units as part of that. But when I got a call from a headhunter and they had this description of mortgage banking, and my initial reaction was, well, that sounds deathly boring. And they got me to go to the first interview. And it's been a career that's definitely not been boring. And I think when you get into the residential side of the business, you really realize how critical that is and how important it is to, the everyday Americans' lives. And you become much more passionate about those issues.
Yeah. Well, passion is Rich's middle name. And
It really is, actually.
well, we're not going to talk about sports cars, are we?
No.
And no, Chris, I'm not retiring. A lot of people, Teresa, think I am retired. But then again, they haven't spent an average day with me, which is, I mean, the hours, I think all of us put in a lot of hours every day. So it's just a matter of my hours. Get up at 4 a.m. and I'm done with my commentary by 6 a.m. And people go, oh, you just coast the rest of the day. No, I don't coast the rest of the day, but I do the bulk of my work before a lot of people wake up here on the West Coast. So anyway, Rich, go ahead.
Well, let's go ahead and get into it. And Rob, I got to start with the VP debate while we were in Vegas for the Acuma conference on Tuesday. Yeah, I've been saying for many months on this show, I really felt like housing was going to weave its way into the main narrative with the presidential candidates and campaigns. It's kind of played out that way. The first debate, not as much. First two debates, I guess, but the VP debate, it was one of the really prevailing themes throughout it. Not even just when the candidates were asked direct questions about it, but interjecting their thoughts on housing to other questions, as politicians will often do. So you could tell they felt it was important, and nothing really new, I guess, from either side. Vance talked about, repurposing federal lands. He talked about reducing government regulation. He talked about their view of immigration's role on the increased housing prices. And Governor Walz, talked about down payment assistance programs, talked about some of the really effective things he has done in Minnesota, viewed, as one of the more progressive states in just affordable housing solutions and things they've done these last few years. Just also talked about removing the red tape for the builder community. But I just wanted to start by getting your thoughts, Rob, on, what you made of all that, if anything.
I thought it was interesting. I mean, you summed it up perfectly. It's not it didn't it didn't come up as much in prior conversations, prior debates as it did the other night with the two vice presidents. First of all, I thought the debate itself was very civil, and that was nice to see. I thought they were both well spoken, both had points that they wanted to make to of varying degrees. And you're right, housing, they didn't shy away from housing, certainly, and they have different ideas, as you mentioned, using federal lands. I wouldn't even, yeah. When I think about the term repurposing, Rich, I think, oh, here was a shopping mall, and now it's going to be repurposed as a, condominium complex, as opposed to raw federal land, which is it's the same state it's been in for millions of years. Building on that, the issue with that, of course, is that, there's not a lot of, say, raw federal land, within an hour of a major metropolitan area that has that you can put a freeway into and has the water and the streets and everything. So that would take a while. But, I think it was Walz who talked about supply and demand and the builder side of things. And, anything is going to take a long time. And when I talk to people in the industry about it, and I'd like to get Teresa's input, but the fact of the matter is rates are what they are. If rates were to drop dramatically, all that does is make a house more affordable, which in turn is going to raise the price of that house. Or a tax credit is going to raise the price of starter homes for first-time home buyers. And so there are issues with those, but the builders have lagged for so many years. The supply, given the 70 million or so millennials that want to own homes at this point, and the supply isn't there, the inventory isn't there. It's going to take builders a long time, years to fix these problems. And then you start talking about the permit process and how expensive it is for labor and materials and raw land and getting the manpower in to actually build those houses and who's going to buy them and where and so forth. There are issues that'll take years to sort through. It's not flipping a switch and suddenly the press isn't talking about a housing crisis anymore. Any solution is going to take a long time. Teresa, what were your thoughts? Did you watch the debate?
Yeah, I did. And, obviously these are issues that we've been really focused on. In fact, at the Federal Home Loan Bank of San Francisco, we have been partnering with Urban on some of the issues around housing, and we hosted some housing summits throughout the district. But I think, fundamentally, there are a number of different prongs to this problem. And it's both about increasing the number of single family units, but also multifamily units, because, we're about 4 to 5 million units short in terms of what we need. And there are a lot of different factors that have created that situation. It's not immigration that just caused it. It's the fact that during the financial crisis, builders stopped building as much. We saw a huge reduction. We saw a lot of lenders who were lending for that construction get out of that business. And they haven't gotten back into the business. They have let the folks that have expertise doing that type of construction lending go. And so they don't have the expertise to do that. Then you've got, on the building side, you've got the cost at the local level in particular to just put a shovel in the ground. I was talking to some builders who were telling me it was $40,000 before they put a shovel in the ground per unit. We work a lot with affordable housing developers. It's been a real struggle for them, and they're trying to do multifamily. So the cost of that goes up. It takes away from the ability to make down payments because it's harder to save. So I think, there's a definite need for the government, and I would argue that it's federal working with state and local governments to clear out some of the impediments, like so much of the cost and the red tape to get to building. California, both you and I, Robert, in California, there's several things that California's done recently, whether it's sort of trying to make sure that things like historic preservation aren't stopping building from happening, or making sure there's transparency around building fees, or accelerating the ability of people to build ADUs, which also allows them to have additional income. So I think it's multi-pronged, working with federal, state, and local. Also, you kind of referenced this in your comment, but federal land, and it has to also be potentially state and local land, right? Because the question is the land where the population is, right? And so there has to sort of be a matching there. But overall, and the one other thing I would just say is there's a shortage of labor, right? So even if you can get the materials, you can get the permits, you can get the land, we need more people to be educated in the building trades. It's something that we've been talking about. The home builders have a Home Builders Institute that is a nonprofit that helps to train people for the building trades. There are other unions that do the same thing, but that's another area of focus. So it really is a multi-pronged issue that needs to be addressed.
Yeah. Yeah. I think, I don't see people flocking to, say, West Texas or huge swaths of Nevada wanting to live there. See a lot of people graduating from college, certainly, and wanting to swing a hammer or dig a ditch versus going to computer programming. So Anyway,
It's an interesting issue because when you think about generative AI and what that means and where, like generative AI can't swing a hammer, at least not yet. I mean, maybe robots will be able to do it at some point. And it's been an interesting question as to whether or not parents have like we're all encouraging our kids to go to college and do certain types of jobs, and but yet these other jobs can pay really quite well, and are we discouraging folks from going into those careers that are really important to the economy overall?
yeah, I told my kids when they were, I've got two kids, Robbie and Marie, and I told both of them when they were getting ready to graduate from high school, look, you don't have to go to college. If you have an idea, or if you want to set up a, plumbing company, or a, masonry or something, and you think that you can show up on time when you need to give a bid, or give accurate bids on work, and you think you can make a go of that, I'm happy to pay for training to go into that field. Neither one took me up on that offer, but but you're right. There's so many facets. Housing itself and residential finance touch so many facets of life that it's difficult just to say, oh, let's blame, immigrants, or, oh, let's blame, the permit process, or let's blame raw land, or let's blame yada. I mean, the list is so long. There's all kinds of things. When now you really got me going here, but back during the pandemic, you couldn't get an appraiser, right? And so suddenly everybody, all the lenders were out there saying, well, we need to redo the appraiser training process. We need to figure out how that works. So then you find out it literally requires an act of Congress, apparently, to change the way new appraisers come into our business. So that has died down somewhat, but yeah, there's always something to talk about out there.
Well, and even getting things like transformers, right? For electrical, access to multifamily. And I mean, that's still an issue. Ordering those things in advance and getting them so you can complete a project, right? So there's still some hangover. I would argue that there's hangover from the financial crisis that never got completely address. And then we added on additional issues with the pandemic. And so, yeah, I mean, these things have to be attacked in a multiple ways. And we all have to recognize, I think you made this point, Rich, that it's not going to all happen overnight, right? It's gonna take some time, but we also have more and more people who are coming of age, right? And baby boomers, me being one of them, we're aging in place. We're living longer. So the houses that used to come back on the market, we're not moving in with our kids the way people may have. And so there are a number of different factors that are contributing to the lack of supply. And I think we just have to be more focused on how do we make that happen.
And then Teresa, this week as well, Bob Broeksmit, MBA president, spoke just on the election at an IMB summit that took place this week, and basically saying that the impact that whoever wins, has on kind of infrastructural related things in our industry, much greater than the impact that either party will have on rates, specifically the GSEs. He kind of dialed in a lot of his comments too, and just really pointing out what, certainly very differing viewpoints on the role of the GSEs, and, kind of stating that Vice President Harris wins, they're, clearly going to stay under government conservatorship and be used as tools to help pursue some of the agendas that we've been talking about that we need to address in housing. And on the flip side, the Trump campaign, if they were to be reelected, their view of more, true market forces kind of controlling things, and the fact that they would likely go down the path of trying to privatize the GSEs again. Did you catch Bob's comments, and any thoughts?
Yeah, I mean, I generally agree with Bob in that regard, and I find it really interesting in any of these election cycles when folks start talking about interest rates, because there's sort of a failure to acknowledge the fact that the president nor Congress has any control over the interest rates. At the end of the day, I mean, that is the Fed, which is an independent agency, and they're looking at other factors and data, et cetera, some of which maybe Congress or the president could have an effect on. But at the end of the day, it's really going to be that economic data that drives the decision making of the Fed. Um, I think in terms of thinking about the policies and how that might affect and who's leading, right, the FHFA, because now with the changed decision, right, that the Supreme Court had that allowed for President Biden to change out Director Calabria for Director Thompson, you would expect that if, whether or not Director Thompson stays in a new Democratic administration, I don't know, but you would expect that if there is a change to a Republican administration, that there will be a change in who is leading the FHFA. As a result of that, I think it is fair to say that if it's a Democratic administration, it's probably more likely to stay in conservatorship. It doesn't mean there were certainly a lot of bipartisan efforts to try to get the GSEs out of conservatorship that never got over the transom. If you remember Corker Warner and, Crapo Johnson, and lots of time was spent on those efforts. At the same time, when Director Calabria was head of the FHFA, he really was focused on trying to get to privatization. And I think recently, like July or so, said that if he were asked to come back, he would be interested in sort of coming back and continuing those efforts. So there seems to be at least a reasonable basis for kind of thinking what Bob's thinking in that regard. The other interesting thing I think that Bob was getting at is sort of, what are you more focused on? Are you more focused, if you're thinking about the policies, are you more focused on kind of having an administration that is focused on maybe broadening what the GSEs are doing, or an administration that may, but at the same time, that administration may do more in the enforcement realm? That was kind of the question. The interesting thing that is kind of an added factor to think about in that sort of equation is a change that the Supreme Court made just this summer, right? So they overturned the Chevron ruling. It was a 40-year ruling that essentially required the courts to give deference to the agency's interpretations. So in this case, the FHFA. And it says if the law is ambiguous, that the judge can make a decision about whether or not they think the enforcement action or the rulemaking was in concert with the intent of the legislature. And so it's going to be easier, frankly, I think, in terms of enforcement actions, et cetera, to challenge those. That doesn't mean it's not costly to deal with it. But if those things pop up versus things that might expand opportunities to do business, I think that will have an effect on sort of how you think about the balance.
So can you give us an example of that? Because the Chevron deference case suddenly came out and it was overturned, and a lot of people kind of shrugged and said, is this legal minutia? But as time has gone on, I think it's become more prominent. So can you give folks on the call like what might be a real life example of something that might happen now where that court case would figure into how it would impact the people in our industry?
Yeah, so let's think about maybe an enforcement action that like the CFPB could bring, right? Where they might be interpreting something to say, hey, you overcharged on a fee, or you did something where there's sort of an interpretive process that they're using to come to that conclusion. It's not specifically that particular fee or there's any cap on that fee, et cetera. But they're interpreting the law to sort of say this practice wasn't acceptable. And they bring an enforcement action against you related to that. I think in the past, if you try to go to the mat on that, a court would have been obligated to sort of defer to the agency's decision about it. Now the court can look at the law that they're essentially interpreting and say, well, we either agree with the agency or we don't agree with the agency. So it's interesting because my understanding is that a number of agencies, including, say, the SEC, everyone's kind of stepped back a little bit because of this ruling to think about where they might be trying to push the envelope on their interpretations that could, in fact, invite more litigation that says, hey, you've overstepped your authority here. So hopefully that gives you a better sense of how that's playing out.
Right. All right. Thank you.
Moving onward, the affordable housing crisis in America. Teresa, you've spent really the bulk of your career, really the center of this issue, and including your recent stint at Federal Home Loan Bank. I guess to start, any examples of things that you did at like FHLB San Francisco, maybe that could be that worked regionally, that can be replicated nationally as part of the solution here.
Yeah, I mean, I think there are a number of things. And first of all, I would just say that it might be helpful for the viewers to have a feel for what the federal home loan banks do, right? So in 1990, the Congress required every federal home loan bank, and there are 11, to put 10% of their net profits from the prior year into affordable housing. It's the Affordable Housing Program. A lot of times it's referred to as AHP. And of that 10%, 35% of it can be used for down payment assistance. Now, the way that has been set up, there's a pretty heavy sort of regulatory piece surrounding that. So it can only be used for folks that are at 80% or less of the area median income. And so when you're in a district like California, Arizona, and Nevada, which is the San Francisco Bank's district, makes it much more difficult in some of those urban areas to be able to deploy the money. We're able to deploy all the money. It's just that it's harder to get it to certain areas because of those restrictions. And if you look at a lot of the down payment assistance programs out there, including at the state levels, they typically go to a higher income level in terms of area median income. The other 65% or more, depending on what the bank decides, goes into funding affordable housing. And of course, each bank is required to have a targeted lending plan where we figure out sort of what are the biggest needs of the district. So some of the things that we've done over the last few years are to kind of add to that. So clearly, one of the big problems that it came up a little bit earlier, was down payment assistance. There are a lot of people who are financially creditworthy, right? They're able to buy a home, they're able to get a mortgage, but they haven't been able to accumulate the amount of down payment. And rents rising because of shortages of multifamily hasn't helped either. So the need for down payment assistance in that sort of middle section of what I call sort of the middle income down payment folks, your teachers, your firefighters, your nurses, et cetera, that's been an area of focus. So in 2023, the board approved our ability to put out $10 million as a pilot program with our members, many of whom are credit unions, by the way. You were talking about credit unions at the top of this. And it was interesting because my team was concerned about getting the $10 million out the door by the end of the year, because we were launching this in May of 23. Before the end of August, all 10 million was committed.
I was gonna
And
say it doesn't go very far sometimes.
right, and we doubled that in 24 to $20 million. And that's over and above the 10% AHP that the bank is doing. These are additional kind of programs that are we call them voluntary programs because they're not mandated. But that's been really important and has made a real difference in terms of helping those folks who can find a home get into home ownership. Another program that we did related to homeownership counseling, right? There's still a lot of issues related to people understanding. I get so frustrated when I hear supposed experts still telling people they need 20% down, right? So we also did a matching grant program where we identify housing counseling agencies, and we sort of challenge our members who are banks, credit unions, CDFIs, and insurance companies to match that. So if they say gave, a housing counseling agency $50,000, we would match to 50. And the first time we did that, we sort of said, here's $1 million we're going to match. And we had members come forward with about 1.2, so 2.2 million went to housing counseling agencies. And now we've had this focus of trying to even match up more the housing counseling with the down payment assistance, right? So we can sort of have even more of a great help to folks going forward. We put out a new program at the beginning of 24 as well, focused on tribal nations. There's a whole nother segment of that, right? And, Rob, you mentioned rural, sort of the rural communities. The cities get a lot of focus. There's a lot of need in the rural communities, and especially the tribal nations. But there are special circumstances. It's harder to put a mortgage on a house, those kinds of things that have to be thought through. And so what we really funded was an initiative to work with tribal communities and others who are working in those communities to figure out what are the ways to advance support for housing in those communities. So those are just some examples of, some of the programs that we've put in place over the last 2-3 years to try to advance these issues.
And I know FHFA under Sandra Thompson's leadership recently kind of tasked the Federal Home Loan Banks with just kind of reviewing their mission, operations, and their roles, and just doing things like this. Do you think? And the Federal Home Loan Banks all operate independently. Is this something you see, like some of the programs you mentioned that sound like they were really effective locally for you and regionally, replicated nationally, or maybe a more like cohesive working together of the Federal Home Loan Banks and as we move forward?
Well, the bank presidents actually meet consistently, as do other parts. So, our COOs meet together, our risk officers meet together, our CFO. I mean, so there's a lot of discussion and coordination, and often there is replication of some of those programs. There's certainly a willingness to share. But each bank is essentially kind of trying to figure out what the needs are in their district, which does differ, right? And there's not much of any, most of the membership is distinct from bank to bank. And so all of that really plays into what each individual bank decides to do. Each bank The owners of the Federal Home Loan Bank are in fact the members. It's a cooperative.
Mhm.
And the board is a combination of member directors and independent directors, some of whom are required to be sort of public interest directors. So it's kind of an interesting hybrid. The other piece that is so critical, and we saw this in the 23 banking crisis, is that I would argue that the original purpose of the banks and the still primary purpose, there's sort of a dual mission, has been liquidity.
Yep.
Right? I mean, if the banks hadn't been there in March of 23, I don't even want to think about what could have happened
Yep.
beyond what did. Um, and and so when you're thinking about especially smaller institutions, it's interesting because as we're required, even though we're member cooperatives, to file SEC disclosures, right? So because those disclosures are about the bank and its risk, we're always showing the top, say, 5 or 10 borrowers. But the real impact is on the smaller borrowers, the small community banks that may be supporting, in some cases, small businesses, right? The credit unions that you were talking about earlier, because they get to borrow from the Federal Home Loan Banks at the same low rate that the large institutions do. And I believe that that's one of the reasons why, unlike other countries, we continue to have a large number, although it's been dwindling, a large number of financial institutions in this country.
Yeah, and it seems like the Federal Home Loan Bank is doing a lot right now to kind of just, their advanced program. Some of the, I mean, a lot of credit unions, at least that I saw this week, weren't signed up yet with FHLB, and we're very interested. Once your replacement, Alana McCargo, was there and spoke. Ryan Donovan, who heads the Council of Federal Home Loan
Yes.
Bank, so they had a big presence at the conference and really opened a lot of people's eyes because they're, any depository I work with on the consulting side, it's one of the first things I asked them, are you signed up with Federal Home Loan Bank? I mean, it's, it really is a great asset and partnership for depository institutions.
Totally agree. I mean, and there's been a lot of focus on trying to recruit eligible members because the membership of the Federal Home Loan Banks is really dictated by Congress in terms of there's been a lot of discussion about whether IMBs, as an example, would ever be allowed to be members, right? REITs were at one point members. But so Congress would have to make that decision to expand membership. But to your point, we constantly have relationship managers who are out there trying to, help companies that are eligible for membership understand why they should become members. And it really is a big benefit.
One other question I wanted to ask you, Teresa, just zoning reform in America. It's clearly a big part of the answer as we move forward, no matter what you do, on a federal level. We heard a lot of that in the VP debate earlier this week. You need local municipalities to adjust their zoning laws to help make for more affordable housing in America. VP Harris has, put out there is a $40 billion fund that would essentially incentivize local municipalities to, reform their zoning laws in exchange for dollars that could be used for local things that they want to do for their constituents. Just your thoughts in general on just local zoning reform in America as part of the solution and maybe how you get there.
Yeah, I mean, I think at the end of the day, it's going to require sort of, the federal government, I think, can provide incentives, but I think it's really going to be much more of maybe the states kind of pushing that down to the local level. There's been some of that, as I mentioned, in California. But there's still an issue with sort of NIMBYism, right? And we've got to change that. The other thing is you can have some higher density housing without it being ugly or problematic, or, and some of that housing, some people, if you talk to some of the experts in this area, would argue that that really needs to be near transportation hubs anyway, right? Because some of those folks would then have access to transportation to get to work. Some of them may not have cars, or maybe they don't need cars. So I think there has to be more of a planning focus about how we're trying to address these issues. But at the end of the day, cities and counties are going to have tax revenues from these things. And I think they need to sort of balance this out because, we've got a big homelessness problem that is, especially in California. And, we keep trying to build units for that, but we really need units along the entire spectrum. I think of this as a spectrum issue, right? Where we need housing for every sort of income level. And so we've got to figure out how do we get those units in place, and we've got to make sure that the rules aren't stopping that. Here in California, another area that's been a focus has been environmental. And on one hand, you want to have some environmental protections, but you also don't want that to be used as a way not to build to house people, right? So you've got to find that balance somehow. But I think a lot of that is the state working with the local, governments. And, to the extent the federal government can help provide financial incentives to do that, that certainly would be helpful.
I knew the time would fly by in this conversation, and I look up, it's already 3:47. It whirled by. But Teresa, so appreciative of you coming on and discussing all these critical items with us today, and good to see you again. And if you don't mind, we'd love to have you back on as we kind of get into the new year here to get your refreshed thoughts on things once this nasty election is in the rear view and we can all move forward on solutions and maybe get bills through Congress and other
I know. I knew you were a VIP because Rich had a collared shirt on.
right, exactly. Yeah, exactly. Yeah.
Sometimes he,
Very rare. Yep.
sometimes he
Well,
wears a
I'd be
hoodie.
happy to join you again. And, I appreciate the opportunity to participate. And, obviously these are incredibly important issues. And it has an effect on the inflation. I mean, we didn't talk about that, but, a huge part of the costs are the costs of housing. And when you don't have a matchup between supply and demand, the cost keeps going up, right? So we've got to address these issues.
Absolutely. And want to
Thank you very
thank
much.
our audience for joining the live version of this. And again, if you're listening to the pod or on YouTube, you can go to charismacommentary.com to sign up and register for the live versions of the show every Thursday at 3 p.m. Eastern. And want to once again thank our guest today, Teresa Bazemore, for joining us. Teresa, thank you very much.
Thank you.
Thanks. Thanks, guys. Good to see you.
And
All right.
to my co-host, Rob, thanks as always. Good to see you in person this week. And we'll be back at it next Thursday at 3 Eastern on The Big Picture. So have a great rest of the week and weekend, everyone. And we'll check in with you next week. Have a great
Bye.
night. Take care.
Here, bye.